Hi, everyone. We will start now one more webinar promoted by FAS Advogados with subjects related to financial markets, payments, and FinTechs. My name is Pedro. I'm a partner at the Banking, Payments, and FinTech department at FAS. And today we will discuss a little bit about open banking. Foreign experience, lessons and perspectives for Brazil. And to discuss this subject with us today, we have four guests. Ingrid Barth, Executive Director of the Brazilian Association of FinTechs. Charles Kerrigan, Partner at CMS in London, UK. And Diogo Silva, Head of Division of the Financial System Regulation Department at the Central Bank of Brazil, and Tobias Gronemann, a Senior Counsel at N26 in Berlin. So thank you all for your participation in our webinar, and thank you everyone that is watching us now. So to start our webinar, I'd like to make a question to Charles. And Charles, could you please tell us a little bit about the open banking implementation process in the UK and its main legal aspects, as well as its main effects in the financial system locally?
Sure, thank you, Pedro. So I think the starting point for describing it is more the commercial aspects than the legal aspects. We've had open banking implementation in the UK now for around 3 years, and it's been a pretty successful experience. There are some published figures that I'll get onto as we speak. The beginning of open banking came from a concern among regulators and policymakers that despite giving encouragement to customers to look for the best bank account provider and move from one service provider to another, in fact, customers tended to be very loyal to the bank that they got. So there were two aspects that were significant in the UK in the beginning. One was the technical aspect around the legal processes that enabled open banking, but probably more significant was the commercial aspect and the desire of policymakers to encourage customers to make use of the full breadth of financial markets providers that existed. So the approach was taken to, as in other jurisdictions, to encourage open banking by enabling the sharing of information. And the regulators in the UK speak a lot about open banking as a principle, and they consistently make the point that what is important to them is putting customers in a position where they are in best able to take advantage of all of the products in the market, and that they have the ability to choose. So they are the people who initiate these relationships and can instruct the bank to share their data. There are some competing aspects, I think, to the policy behind this. One is the competition policy that opens up the market. But on the other hand, there's the concerns about liability and data protection issues, particularly with the European General Data Protection Regulation, to ensure that customer data is treated in a confidential way. So there are some tensions there. And when we get to the legal aspects of implementation, we've got to manage this tension to ensure that customer data is protected whilst at the same time is available in such a way that it can be used to enable fair competition and better outcomes for customers. the legal aspects then are balancing those competing policy interests and ensuring that data, on the one hand, can be shared, but that customers control their data. And the method of doing that is to be, for the banks to be very clear that they have, I think that the language is express and transparent consent to the use of data in this way. And then the second legal aspect of it is the more technical side, which is two new types of regulatory licensing that come available in the UK as part of the implementation for open banking. One relates to a regulatory authorization to be able to initiate payments. So part of open banking functionality is enabling payments to be made, and that is now a specific new regulated position. And second, the ability to share data. So we've got two new regulatory licenses available for participants in the market. And then just to come back to this point about how successful it's perceived as being, we had in the early part of this year some very positive press about the fact that there were now 1 million customers using open banking in the UK. So it's not a majority of customers at all yet, but it's significant usage. I think there are now over 200 regulated entities in the UK, including the large financial institutions that are signed up for open banking. And there's a long list of banks. Most banks in the market have got open banking functionality now, but also these newly regulated entities that provide more specific functions, sharing data and initiating payments. And I think the latest figures that I've seen is that there were over 1.25 billion users of the APIs relating to open banking. So the regulators are very much in favor of it. In many public speeches, they come back to the point of the value of open banking for customers and the value of it for the industry in ensuring that innovation is supported, because innovative businesses can get through to customers. They're not blocked by the incumbent financial institutions. And it took some time for there to be a broad range of providers, but we've got that now. It took some time for there to be good uptake by customers, but we seem to have that as well now. And so next question is for the regulator, where do we move to next in implementation, I guess?
Thank you very much, Charles. This year we are here in Brazil passing through the implementation of both open banking and also instant payments in Brazil. So it's a very, very interesting time here. Great to hear the experience of open banking implementation in the UK. Before we move forward with our webinar, I'd like to remind you that you can send questions to our speakers. So you can see in your screen an icon, Q&A. So please feel free to send your question to our speakers, and we'll read it in the second part of our webinar. So please feel free to send it in English or in Portuguese. We will translate it if necessary. So to move forward with our webinar, I'd like to make a question to Tobias. Tobias, could you please speak a little bit about the open banking implementation process in Germany and in the European Union, as well as its main legal aspects and challenges?
Yes, hello everyone. Thank you, Pedro, for the nice question. First of all, to give a little bit more of background why I am here and say something about open banking in Germany and the European Union is that I am senior legal counsel at N26 Bank in Germany, and as a so-called challenger bank or mobile-only bank, it's one of our main aspects to implement new techniques and new technical provisions as soon as possible. So my team and me are focusing on banking law and regulatory law, and open banking is in Germany and in the European Union part of the regulatory law. It's mainly stated in the so-called Second Payment Service Directive, and I will come back to this a little bit later and to all the other legal bases for this. As Charles already mentioned, the market appearance of open banking is mainly with so-called third-party providers, which provide an account information service or a payment initiation service. Both services are now regulated, as Charles already mentioned. As well as other banks are using open banking, of course, as well. So this is something called multi-banking, that you can have all your bank accounts within one app. And this is, of course, something every bank aims to, that the customer is only with this specific bank. As I already said, the legal basis is the Second Payment Service Directive. The Second Payment Service Directive is a development based on the first Payment Service Directive, of course, but we have to go back a little bit longer in history. I think the roots for open banking are in the so-called SEPA directive. SEPA is the Single Euro Payment Area and is a payment scheme within all European and EU countries. And there we have a harmonized payment scheme within the European Union, which leads to more harmonized laws regarding payment contracts or account contracts with our customers as regulatory matters. The PSD2 was implemented by the European Union in 2015, and the European countries had time until 2018 to transpond the regulation into the national laws. And so we have open banking, or let's say regulated open banking in Germany since 2018. And there are some periods the banks and other providers have time to implement the new regulations. Besides the PSD2, which is the main regulation, we have so-called RTS. RTS are regulatory and technical standards, which sharpen the requirements of the PSD2 a little bit. Yeah, let's say technical topics. And we have the opinions of the EBA, the European Banking Authority, and of course of the local financial supervisory authorities in Germany. This is the BaFin. So if we have discussions regarding open banking regulation, we mainly discuss it with the BaFin. They provide at these times webinars as well, but we often meet with them for smaller questions. And for us as a legal team in a mobile bank or in a digital only bank, it's the most part of the work regarding open banking or the regulation of open banking is to, let's say, translate the requirements of the regulations and RTS and opinions into a language our product and tech teams can understand a little bit better. And of course, we are going to help them if they have questions regarding how to interpret the requirements of the RTS and of the opinions and the PSD2 as well. And of course, as a bank, we have to open our API to third-party providers, and the local authorities are really keen that this is that all banks are doing this in Germany, and that this is compliant to the PSD2, so that all third-party providers have all the access they could have regarding the legal requirements. And there are only let's say, smaller questions, how far these this access banks want to grant to third-party providers, of course. And yes, we are looking forward for the future. I think, let's say 5 to 8 years, there will be something like the PSD3, and we are looking already into what's maybe coming up, and if there's a more open banking as we have it under the regulations right now.
Great. Thank you very much, Tobias. So moving forward with our webinar, I'd like to make a question to Diogo Silva, who is representing Central Bank here in our webinar. So Diogo, could you please tell us about the role of the Central Bank of Brazil in the implementation of the open banking ecosystem in the country? And also tell us a little bit about the main challenges, the status of this implementation, and the next steps.
Sure. Thank you, Pedro, for the invitation and also the opportunity to talk about the Brazilian Open Banking Initiative that I have had the honor to be part of. So as you probably are aware, the Brazilian Open Banking model possesses one of the most comprehensive scope of data and services among all jurisdictions that have decided to regulate this topic. I guess probably the most comprehensive, but I'll leave it as that. But it includes the sharing of financial customers' data on deposit accounts, credit cards, credit operations, investment, insurance, and open pension funds. And also the provision of services on payment initiation and loan proposals forwarding. This actually resembles the Open Finance Initiative that some jurisdictions are currently pondering over to also implement something on those lines. So it's actually a long road. We are just at its start. So we do have a few challenges ahead, and I'm sure we will be able to overcome them without many problems, but we will need everyone to help with what they have on their hands. So first, I will go ahead and point out the elephant in the room. So yeah, the implementation deadlines. I'm sure someone would inquire me about that, so I'll go ahead and talk a bit about that, my initial speech. So it's a challenge for all involved parties, including for the Central Bank of Brazil, but we deem it as feasible. So we in the Central Bank of Brazil are currently discussing how we'll be structure ourselves to deal with that. So our supervision department and our IT department will play a bigger role on that than the regulation department, but the regulation department will keep participating on these discussions, because participating institutions will have some questions concerning the regulation in place. But also we might be have to do some amendments on the regulation in place. So the regulation has covered the main aspects. We have issued rules on topics that we believe the participating institutions would have some friction in order to decide things up. So this includes the scope of data, responsibilities of involved parties, and also the gratuities concerning the reimbursement of costs between participating institutions. So the convention that will have to be agreed between participating institutions will have to deal on topics like technological standards, and also some operational procedures they will have to implement in order to comply with the regulation. So we not want the participating institutions to reinvent the wheel here, but so we believe some safe shortcuts are viable and recommended, actually. So if they take into consideration what other jurisdictions have done so far, like the UK, Europe, what Australia is doing, and even Mexico that has recently issued some regulation on this topic, is actually a recommended road to take, and we actually incentivize institutions to take that as a starting point for the discussions concerning the convention. Nevertheless, we believe that the most important issue here is having an adequate structure responsible for the governance of the open bank implementation. So here, the Central Bank of Brazil is taking the role of leader to, alongside the industry, to propose the initial structure for the implementation structure. So it's expected to be designed in the forthcoming weeks. The central bank actually intends to publish a piece of regulation to set up the manner that we expect that the participating institutions design this initial structure. And we want it to be as representative and diversity and promote the diversity of participating institutions as much as possible. So we have had a standing committee that Ingrid here also took part of it. So we discussed it with the industry, many available options, and we are currently on the process of finishing the draft of this initial structure for the governance. And last but not the least, I believe that engaging consumers is another key challenge for everyone. This involves financial education issues, but we also have to ensure that the customer experience happens without friction. So the Central Bank of Brazil will follow the implementation to ensure that consent, authentication, and confirmation stages are executed in a secure, prompt, accurate, and convenient fashion. And we will also monitor the availability of interfaces and might actually issue complementary regulation on this particular topic. So there are several other challenges. I believe those are the most important ones at hand. Not trying to be repetitive, but the customer experience is a key point, and we want that all involved parties contribute in some fashion, because open banking in Brazil and in some other jurisdictions, they follow the same path, is a measure that was not actually a demand by consumers. They actually are not completely aware of what it involves. It was actually seen by the regulators and also as the market as a form to promote new business models, to even ensure that consumers are able to compare products and have products delivered to them that are most suitable or more delivered in the most convenient fashion. But it's not something that the consumers are aware. It's tied to our law, the LGPD, that deals with the sharing of customers' personal data that is now de facto owned by the consumer. So we will have to do some. We will have to ensure that consumers are aware of what they are doing, to what they are sharing, and also see some benefits from doing that. So that's I believe the main challenge, but it will have to involve everyone, not only the central bank will play a role here.
Thank you very much, Diogo. I take the opportunity to congratulate the central bank, because we, as we Brazilians know very well, we used to have, we still have a very concentrated financial sector. So we are seeing many movements from the central bank to change this situation. both in the financial sector, in the payment sector, a lot of initiatives that will be very, very positive to the markets and to the consumers as well. So thank you very much. And to finish the first part of our webinar before we move to our Q&A, I'd like to make a question to Ingrid Barth. So Ingrid, in your opinion, and considering the implementation of open banking ecosystem in Brazil, which is in course, what are the main benefits and also the challenges for Brazilian FinTechs and for foreign investors that intend to invest in the Brazilian FinTech sector? What would be the benefits and the challenges given this movement led by central bank?
So thank you so much for the invitation. It's an honor to be part of this webinar and also part of the open banking implementation in Brazil. It's a very exciting time in Brazil because we have a lot of good projects that these projects, I believe they look to promote a good financial market, inclusion for the people in Brazil. Just to start in the beginning, we have a very big challenge in Brazil related to the financial market. So we have people that they don't have access to a regular bank account, people that don't have the financial education, and now more than other time, data education. It's a very important topic that we need to discuss with the open banking LGPD that we are having in Brazil also. So when you have a lot of challenge, we can have a lot of opportunity also. So especially for FinTechs that we are API native is a very good opportunity because we are dealing nowadays on a daily basis with APIs, with microservice, with this type of technology. So for us, it's easy to plug in, plug out any platform, for example, financial institute that we have a partnership. And also, I believe it's a very good opportunity to building new types of business plan. So we can have FinTechs, but we can have also tech fins, that technology companies that can provide this type of infrastructure for financial institutional, for the FinTechs also, because sometimes it's a lot of work to do. It's easier to plug in a tech fin to help to be in open banking space. This is the first opportunity that I can say, but the other opportunity, especially for investors, is not only to invest in Brazilian FinTechs and companies at all, startups, but also bring it to Brazil some business models that we can see, for example, in UK that nowadays is handled more than us with the open banking, and also other types of business and technologies that we are not dealing today in Brazil. Also, I'm seeing a very good opportunity to financial education at all, investment. If you don't have, for example, access to a regular bank account, you do not have access to investment, and I believe this is part of it is the most important thing of open banking for me. So we needed to provide access, we needed to provide credit for the population, and also a very good user experience, as we are telling in this webinar all the time. User experience for me is very, very, very important, because when you are familiar with the platform, with the app, with the internet banking, or the marketplace for financial market, we can use more comfortable, you can have more powerful with your data, you can have more responsibility with your data. So I believe everything we can put together. And I really like to do a futurism exercise. In my opinion, in the future, we will have more fluid access to financial markets. So thinking about usability, user experience, we can have, for example, financial services in hubs without to need to open another app, another platform. We can use one platform to have investment, payment, and everything that we need to do in the financial space. So my view of the open banking is the very good opportunity to put everything together without a lot of steps that we are having today. And then we can be more familiar with the financial market at all. And I believe it's a very good opportunity to Brazilian economy at all. And not only financial market, but we can include e-commerce, we can include any other type of services that we need to pay. So financial is something that maybe in the future will be integrated with everything that we want, and the open banking will be the door for that.
Thank you very much, Ingrid. Well, on behalf of FAS, I'd like to thank all the speakers. Thank you very much for your contribution. So we can move for our Q&A. And the first question is to Charles. And Charles, the question is the following. What were, if any, the impacts of Brexit in open banking and, in a nutshell, in the financial sector in UK as a whole?
Gosh, well, that's a great question. I think I've got two options for my answer, and one takes about 3 seconds, and the other takes about 3 hours. So I'll try and go for something between. We still have a range of possibilities in terms of how well, I should say formally, because I'm sure the UK current government would like me to say it, that the Brexit has happened. So we're now in the transitional period and are discussing the future relationship between two distinct states. That's the legal answer, but of course it doesn't feel like anything has changed at the moment because we're in a transitional period. We still have a range of possibilities for the relationship, and there is a lot of lobbying going on from the financial sector to ensure that relatively little changes. Naturally, the UK and particularly London has been a large financial centre for a long time in the European projects. I think in a broad perspective, I think that the European capital markets may be helped in the long term by not having so much business go through London, because one of the things that we've looked at, and I've done work with the European Commission before I was stood down following Brexit. We look to have more centres of capital markets across the continent. The difficulty is getting the depth of liquidity available. I think this is a different issue because we're not here talking about access to capital, we're talking about access to services and promoting services. And I think the short answer is, I think the UK will still retain the features of regulation that are behind open banking. I think it's been perceived to be a success, and whether we have the same regulations or we effectively bring in new regulations, but in the same terms, I think it's going to be one of those. The open banking is a good example of things that can be done on both an international and a national basis, because it's generally national consumers that are the focus of it. The open banking in the UK is directed towards benefiting individual customers and small and medium enterprises. So it's directed at that kind of local domestic market. I think we'll keep going because the purpose of the principles must be right, that giving customers access to better services in order for them to have more financial inclusion and access to better products, that won't change. I think if we look at some of the examples of where this works well, we see some of the test cases and people are able to go onto their dashboards, and because their information is shared, they get better offers for, say, a personal loan. And that means that the benefit to them is by permitting their data to be shared, that data can be used by service providers in order to bring to the surface better options for the financial product that they're looking for. So I think we will continue with it. And the conversation in the UK, I think, again, like most jurisdictions, is can we move from open banking to open finance? And the other speakers have touched on that, and so that would be a more a broader view of it rather than anything that changes. I think the final thing I'd say on that is one of the things that the industry in the UK is positive about and working on is use of open banking with price comparison websites and similar, so that customers have got access to the best range and the best products. So again, we keep coming back to this point that it is intended to benefit consumers, and all of the good case studies show that benefit in quite clear financial terms, that someone gets access to a loan offer that is a cheaper offer than they would have got if they were just working with their traditional financial service provider.
Great. Thank you, Charles. Well, the next question, we have two questions for Diogo, but they are basically the same. In fact, one of them encompasses the other. So I'll read both. The one is from Albert Morales. Are there any plans draft for regulating third-party providers for account information service in Brazil and provide licenses? And the other question, which encompasses the previous one that I just read, the Brazilian is from Bruno Loyola. The Brazilian Open Bank Initiative does not include in its scope the role of the account information service provider or the payment initiation service provider as a regulated independent company like in Europe. In fact, we have a mention of the payment initiation service provider, but we do not have the regulation yet. These type of companies are key to provide a seamless customer journey and promote innovation. Although the regulation in Brazil is wide in terms of scope, the potential of innovation of the project could be limited because of the lack of formal TPPs. It will be an interbank instead of open banking. Could you please indicate if the central bank or the discussion groups are considering this? I think the question basically, Diogo, is about the account information service provider and the payment initiation service provider. And I will take the opportunity to ask if you want to tell us a little bit about these two figures in Europe would be great. But please, Diogo, feel free to make your comments.
Okay. So first of all, this concerns our legal mandate. So we have talked with our legal department, and the conclusion is that we do not have the mandate to create a figure like the AISP, the account aggregator, account information service provider. So what we have done, we have put on the account aggregation service on the regulation that was issued, but it could only be provided by entities that are licensed by the Central Bank of Brazil. So we do not have the mandate to create a figure that would only do that. But talking with other regulators and market participants from other jurisdictions, we have also seen that a model that's only based on account aggregation service is not actually sustainable in the long term. So we actually believe that a firm that might be able to pursue a license to be a payment institution or some sort of credit fintechs like SCD, SCP, and also provide other services that are associated with this license would be a better alternative. And actually, we believe that this might be a good route to take into consideration that we lack the mandate to create an institution that would only aggregate data from consumers. Concerning the PISP, we do have the mandate based on our law, on the 12. Forgot the number now. Sorry, but the law that provides for the payment schemes and payment institutions in Brazil. So we intend to create a new type of payment institution that would provide the payment initiation service. So we have issued the basic regulation concerning open banking, but we do intend to make some other amendments on our regulatory framework. So one of them would be to create this PISP or something that would be the PISP here, a new type of payment institution. That would be only do that, but we would also on this specific provision indicate that other institutions, other payment institutions, for example, would be able to also provide this type of service. Explaining a bit, it is in some shape or form also tied with other projects that the Central Bank of Brazil is currently leading, like the PIX, the fast payments project. So we see that it's an institution that would initiate a payment on a bank of the customer. It actually has to be different from, or at least on the open banking model to comply with the customer journey we have envisaged. It would have to be a different institution than the bank that the customer that will send the funds are part of, has an account on. So it would initiate a payment. So the API would be with the bank of the payer, and would instruct this payment. The consumer would have to first consent on the payment initiator, and then authenticate on the bank he currently has the account, and would instruct the payment. It might be successive payments. So the regulation has some specific provisions to deal with the different types of payment that could be initiated by the payment initiator. So it would actually have also to follow the payment scheme it's pertaining to. So if it's a PIX, it would have to comply with the rules of PIX. If it's a TED, it would have to comply with the rules of TED, and so on. So that's basically my answer to this question. But if you have any specific questions concerning those models, we could go on.
Can I take the opportunity to make a question, Diogo? Can you consider part of the open banking, for example, the banking correspondent? So, for example, we have also the banks. We have entities that have a specific license, but we can also include in this environment the Corban that we normally see in Brazil, the banking correspondent.
So actually, you gave me the opportunity to talk a bit more that I should have on the previous question. Those that are not under the license of the central bank, it wouldn't be able to be participants of open banking. They would be able to make bilateral agreements with financial institutions in order to access data on the form that we have envisaged for open banking. So, for example, some firm that is not able to pursue a license for PISP, but also wants to aggregate data, they just want to aggregate data from consumers, they would have to make bilateral agreements with financial institutions. It's what on the regulation we talk about as partners. So it would have to be a partnership agreement in which the financial institution would have to also see some commercial benefits from doing that. But here we are strictly talking about a situation where the client is common for both parties, and the receiving end of the data will use that data for the purposes it has specifically informed the consumer prior to obtaining his or her consent. And this is a firm we will not be acting under the guidance of the financial institution. That's why it's not based on the correspondent model, and we actually forbid it to be a contract of correspondent to be part of. So our open banking model, we are mainly talking about financial licensed institutions or payment institutions that would obtain the data for reasons for their own purposes that they have clearly indicated to consumer. But there is only a single exception to that rule. That's the forwarding of law proposals that is based on the correspondent model. So here it would enable some sort of marketplace of credit, but here it's mainly based on correspondent agreements. So we intend to have some sort of standardization when those services are rendered. We are aware that some correspondents already do that, but we intend to have some sort of rules that would standardize the provision of those services. But for the other service, we do not see it as a correspondent-based model, because here we are talking about the sharing of data between participants that do not have to have an agreement in place to share data. Nowadays, for those data to be shared, they need to have some agreements in place, some contracts in place. So open banking is mainly to enable that having obtained the consumer consent for that data to be shared, no contract needs to exist between both parties. So that's why we do not see this as to use the correspondent model as an example of the open banking rules that we have provided, just specifically for the forwarding of law proposals. That here we see that one part of the of the participating or the institutions that will share the data could be a correspondent.
Thank you, Diogo. Thank you, Ingrid. Tobias, I don't know if you want to talk a little bit about these figures in Europe, but please feel free if you want to do so.
Of course, I can say a little bit about it because as a bank, we are fully regulated in Germany and have a banking license. So all these questions, if we are need to be regulated or if you need a license, we don't have these questions within a bank. But for account information services and payment initiation services, you have to distinguish between poor technical providers, or if you have a real account information service or payment initiation services. Only if you get in possession of the data, or if you get at any point of the process in possession of the money, you will need a license from the financial supervisory authority in Germany, as I already told you. This is the BaFin, but it's more or less that you have to register and you have to fulfill some requirements. These are not the same requirements, of course. You have to fulfill as a bank, but yeah, you have to be incorporated. You have to prove some kind of insurances and so on. And this, yes, to be honest, I don't know much about these third-party providers, but in general, what I see from the market and what I see from third-party providers which approaching our open API interface, most of these are a fintech in a really broad sense. Sometimes the firms are older than 10 years, but they say claim for themselves to be a fintech, and what they all have in common is a strong technical background. And so yes, if a license is needed, you have to look really in the specific business case of a payment service provider. But yeah, in general, of course, they are regulated by the supervisory authority.
Thank you very much, Tobias. We received a lot of questions here, but given our limit of time, I'll make a final question that we received and then open for final comments for those who want to do. And the final question is to Charles and Tobias, and it's a very interesting question. It's the following. It's a long question. I try to summarize here. Given that your markets are markets more mature with the open banking ecosystem, what you would have done differently in the implementation process in your respective countries? Of course, it's easier to see the things from the future, but well, what you have done differently, and given that Brazil is currently implementing open banking, what would be your suggestions, given your experience in your countries, to the Brazilian regulator? We can start with Charles and then Tobias, please.
Okay. Thank you. I think it's a hard question because I think that most jurisdictions, when they implement regulation, are looking at the same questions, and generally the answers to those questions are fairly obvious. So we're all looking at questions around sharing of data, making data available, and questions around the ability to implement payments, and then controls to ensure that the integration of systems, the point where one party's system meets another party's system, is safe. So I don't think that the answer to that question relates to how the technical points could be implemented. I think you always deal with the same list of issues, and you generally come with the same conclusions, because what you're looking to do is provide a benefit for customers. I think the hard part is the commercial question, because even following some years of implementation in the UK and over 1 million users and over 200 regulated entities, and there's a website in the UK called openbanking.org, and it was established as part of the support network, and it publishes information and figures in relation to it. And there's a very long list of market participants now, including most banks that people would deal with. But there still remains the original question from 2015, 2016, because still most consumers are very loyal to their banks. And even with this infrastructure that makes it financially beneficial to them to participate in open banking, and it's intended to be as easy as possible, the regulators have focused very hard on ensuring that the walls come down. The incumbent organizations can't keep high walls up. It's still difficult to persuade people to make that change. Now, I'm interested in Tobias' answer, because N26 has done a great job of establishing a reputation in a market, bringing on a lot of customers, and looking a bit different to the kind of incumbent banks, because I think consumers won't move if they're moving to a bank that doesn't look any different to their other bank. However, and this is maybe the controversial bit, I think the difficulty is if a challenger bank becomes very successful. Really, this is a point around brand. The risk is that all of the consumers will go from an old brand to a new brand. We will look like we've solved the problem, but we won't necessarily have got more diversity in the marketplace. We'll just have changed where the market share lies. And I think if the original question was for the competition authorities, how do we ensure that the marketplace is as diverse as possible, has as many participants as possible, and as many customers moving their accounts and particular accessing different products from different providers, not being tied to their own provider. We've still got some way to go. So I think the hard point is around customer behavior, the battle for the customer, more than technical implementation.
Yes, Charles, I think I can jump in at this point, and I think as you have more the consumer or customer perspective, from my bank or in-house perspective, the things lying a little bit we have other problems, and of course the biggest problems we have are technical issues. This is even if we are a fully digital challenger bank with a strong technical approach. Implementing the PSD2 and in general and open banking specifically, this was a huge workload. First, from a legal perspective, because the PSD2 itself and the RTS are not so clear as they are supposed to be. So there are many questions, and there are many questions which you can answer in different ways, and of course in the end we are a company and we had to take or make business decisions at some points, but as we are in a strong conversation with the supervisory authority, we are totally compliant at this point. And if the question, I think the original question was what should be taken care of if implementing a similar regulation in Brazil. And I think one of the most important things is to give banks and the companies which shall be regulated enough time to implement all regulations from first a legal perspective and then secondly from a technical perspective, because of course it's easy to write a regulation as a legislator, and of course you always have the customer protection in mind, or the benefit of the customer, and that's totally okay, but in the end the regulation has, or the requirements of a regulation have always to be transposable into the daily business. And this was the biggest challenge for us and will still keep us busy some time, but I think this is what I can say to this question.
Thank you, Charles. Thank you, Tobias. So to finish our webinar, we're open for final comments for those who want to make them. So please, in this order, Ingrid, Diogo, Tobias, and Charles.
So thank you so much again. I am very happy to be part of this project, this big and challenge project in Brazil. I'm sure that the central bank is doing a very good job. It's not because Diogo is here. I'm part of the project, so I can say that central bank, the group of the central bank is taking care very close to include every type of financial institutional, FinTechs, and put every word together to be the best open bank that we can have ever. So I believe that will be very good for the economy, for FinTechs, for financial spaces at all, and we will provide more access, user experience, and credit for the economy. So thank you so much again, Pedro, for the invitation.
Thank you, Ingrid. Diogo, please, your
okay. First of all, thank you, Ingrid, for the kind words. So yes, something you said that is actually something important is that open banking might reach some underserved consumers like the SMEs. So that's something that is also a key point for open banking that builds on the innovation and also the use of technology. So open banking is enabling consumers to reach some products that are now digitalized. So the pandemic has also made some consumers that were not familiar with the digital banking to start doing that. So open banking will build on that, and we will have some challenges for financial education that were not how could you say, that were not high on the agenda, but now with this pandemic, I guess financial education becomes even more important than it was in the past, and also digital inclusion of people. I would also like to use my time to specify a few things. So the law that I had forgotten the number is law 12865. So it's the law that provides for payment schemes, and also to clear things up concerning the domestic correspondence. So as the regulation says that the consent must be obtained for specific purposes, and the data transmitter might not have access to those specific purposes, and also say the open banking model is is based on licensed institutions. So I would like to clear things up and say that the sharing of data is not between a licensed firm and domestic correspondent, and the only type of sharing that the open banking ecosystem would admit between a financial institution and a domestic correspondent would be the foreign of law proposals. Just to be very clear on this particular subject, because I'm not sure if my previous question had cleared things up concerning this topic. But that's that. Thank you, Pedro, for the invitation, and also for the other participants for the suggestions that we will strongly consider when we take the regulation, and also when we have talks with the industry concerning this particular subject. So thank you.
Thank you very much, Diogo. Tobias, please, your final comments.
Yes,
If
first
any.
of all, yeah, always. First of all, thank you very much, Pedro, for having me on this really interesting webinar. First, it was really interesting for me to get an insight on the status of open banking in Brazil, and yes, it was really interesting to listen to the other participants. And yes, I'm really happy that you were interested in my insights of open banking we have at N26 and the German market. And if there are any other questions from you or some of the attendees, please feel free to reach out to me via email.
Thank you. Thank you very much, Tobias. Charles, please, your final comments.
Thanks, Pedro. Well, I think I repeat those comments. It's been very valuable for me to hear all these perspectives, and I've enjoyed the conversation, and also people can reach out to me directly on email or LinkedIn. I think it will always be a difficult question, because there isn't a model where one size fits all. And I saw a report, I think last week in the UK, where 8 million people don't use cash, and 8 million people only use cash, and everybody else is in the middle. And so it shows the kind of challenges that face these sort of initiatives, but for sure it only goes in one direction. I think Tobias is a great voice who is living this in practice. Ingrid makes the point that tech fins as well as fintechs are significant, and Diogo is explaining that there's a lot of complexity behind supporting customers, so it takes a lot of effort for regulators. That there is a lot of complexity. So maybe my final point is that alongside all of the regulation in the UK, our regulator continues to repeat that the overriding principle is the obligation of treating customers fairly in financial institutions, and that I think is a good guiding point for all perspectives in looking at this as a topic.
Thank you, Charles. Well, with these final comments, we finish our webinar today. On behalf of FAS, I'd like to thank all our speakers. Thank you, Ingrid. Thank you, Diogo. Thank you, Tobias. Thank you, Charles. It's an honor and a privilege to have you here. Thank you very much for your time. I'd like to thank everyone that watched us today live, and remind you that our firm will make the video of this webinar available soon in YouTube. So thank you very much. Until our next time, take care and stay safe.
Thank you, everyone. Bye.
Bye-bye.
Have a great day ahead.
Thank you.